One of the most persistent anxieties in personal finance is the question of timing. When should I invest? Is now a good time to buy? Should I wait for the correction? These questions feel important, they feel like the right questions, and they are almost entirely the wrong questions. The honest answer, the one that decades of data consistently support, is that nobody knows. Not the analysts, not the fund managers, not the economists on television who speak with extraordinary confidence about things that have not happened yet. Timing the market is not a skill. It is a hope dressed up as a strategy. Epictetus taught that the fundamental division of all things is this: some things are in our power, and some things are not. What is in our power is our choices, our values, our responses, our actions. What is not in our power is outcomes, how markets move, how timing unfolds, what the world decides to do on any given day. The investor who spends their energy on what is not in their power, timing, prediction, market direction, is wasting the one resource they actually control. Here is what the data actually shows. Missing just the 10 best days in the market over a 20-year period cuts total returns by more than half. Not missing years, 10 days. And those days almost always cluster immediately after the worst days, when fear is highest, and most investors have already moved to cash. The investor who waits for the right time almost always misses the recovery. The investor who simply stays, contributing consistently, not reacting, holding the process, captures the full return that the market offers over time. There is a practical application I use with clients. Instead of asking when to invest, ask how to invest. Build a systematic process that removes the timing question entirely. Automatic contributions on a fixed schedule, automatic rebalancing when allocations drift, a written investment policy that governs decisions before emotions arrive. When the process is set, timing becomes irrelevant. The money goes in, the compounding continues, and you are freed from the exhausting work of trying to outsmart a market that nobody has ever consistently outsmarted. The right time to invest is almost never obvious. That is by design. Markets reward the people who stopped looking for the right time and simply built a process that does not require one. Contribute, rebalance, hold. That is the whole strategy. And it has beaten most professionals who spent their careers trying to improve on it. I will see you in the next one.